Hello, this is the Chart Profit video. Over an hour pre-open on Friday 30th of September. This from the pre-open today. Looking at the E-mini S&P future. This level here, 2135, is the minor point of control. All the value areas this week have been generated above that level. We've had a couple of probes below it here, which was immediately rejected just after the open on Tuesday, and I marked reactive buying down here, and overnight today been very close to that level, the low 2135.75 I think. Okay, here we've got the current live chart. So here's the two probes earlier in the week and very close overnight today. So 2135 price below here in the short term would be weak price location and suggest lower. We're holding at currently 2142.5. That is the halfway point of the recent market high, and we prefer to see price printing above that level, which currently is. It's recovered a little today. Some inflation numbers out a little later. We're seeing some weakening in breadth, etc. But looking at this chart, which is my main market for important levels, price below 2135 I know would be a weak price location. Just giving you a little more data here. This is like the auction chart for the E-mini. Is 2135. That's that probe just below that level. That's encouraging when you see a rejection on a test just below a point of control like that, even a minor one like this. So it's now proven support. That just adds to the importance of the level. Price below here, emphasize, I think would be weak. Just taking you here into the daily breadth chart for the New York. These two bottom indicators have weakened a little. The net new high is 25. The 5-day moving average in black has just dipped below zero, and the percentage stocks in my New York list printing above their 50-day moving average. That has a drop below 50. So these two indicators combined gives us a red indication here on the breadth line of the daily pulse chart. And for the last couple of weeks you can see it's been quite volatile here. There's too much red on the chart currently to be overly encouraged by the pulse chart. One minor positive is the fact that the momentum indicator at the bottom here, although it's negative, which indicates trend down, we are seeing momentum slowly ticking up. If that significantly turns down and the breadth is red, that would greatly weaken the outlook. Currently we're holding on the spider chart at the top here, 209.90 is the major time support. And we've had a little reactive buying, as you can see, above that level. So hoping the spider can hang on to that level. Price below here would certainly weaken the chart. Let's just run through the important levels on some of the major charts here. This is the Russell 2000 ETF, IWM. 122.65 has been marked on the chart for quite a while. It's the 5-month point of control. Yesterday's sell-off, and in fact all the price action this week has been above that level. We hope for support here. Price below that level again would weaken the outlook. Just quickly running through these. This is the Qs, sort of equivalent level, the 4-month point of control, again marked on the chart for quite a while. 116.97. This point here, price below that level again weakens the outlook. This is the UK Footsie 100 chart. This is current. The index has recovered a little. It was down about 90 something earlier. The important level here is the 4-month here at 67.23. As long as the Footsie holds above that level, it's in a long-term strong price location. This is the Dax chart. As we've already discussed, the 3-year value area high is up here, 10.742. A couple of probes above that so far been rejected. We're on a multi-week low today. It's been lower today but coming back a little towards the high of the range. The major point of control, the major support of 97.50 is down here, and we were looking at the possibility of that migrating higher. That hasn't happened yet, so this is still valid, if you like, resistance, this value area high up here. The dotted line in here around 10.550 is the halfway point off last year's high. To remain optimistic about this chart, we need to see price printing at least back above that halfway point. I'm hoping this point of control will migrate higher, lifting this value area higher, and again that hasn't happened yet. This is the T-bond ETF, TLT. Interesting, this level here at 139. Again, this has been marked on the chart for a few weeks. We've seen a recovery back above the halfway point for TLT off the July high to this low, which is encouraging. And as you can see clearly, we're finding resistance at that 4-month. So price above that level, that's above 139 approximately. Printing time up here would be a real positive for the chart. Price on the daily oscillator is getting a little overbought at resistance. Really want to see price printing time above 139 here to remain optimistic. As we've looked at in previous week, another chart with a 3-year value area high currently in play is the GLD, the Gold Shares ETF. There's the rejection. 2 probes above that level. The major point of control is at 118.22, which relates to this. So once again, we're hoping that this point of control will migrate higher with time in this kind of area, but again, that hasn't happened yet. And in the short term, with price below that halfway point here, from this high to this low, it's in a weak price location. So once again, hoping this will migrate higher. That will lift the 3-year. Failing that, just price back above 128, above this halfway point, would put it in a little better position, but you can see the rejection here as well. So again, that would need to happen to take any kind of a bullish view at current levels. Looking here at the oil fund ETF USO, the major is at 1078. Having a pretty good week this week and currently printing above that level for the first time since early September, so that's an improvement. We need price to hold 1078 now, and I've just drawn in the minor halfway point off that high back in May, June here, that dotted line, and we're just probing above that level in here. So price giving us this sort of price action, just a higher low or some consolidation above that level, puts this chart in a much stronger position. And actually, if we look at crude futures here from the major low earlier in the year to this high, the halfway point comes in here. If you remember, we had that very nice retracement support there, and then from that high to that low, the halfway point in here, and we're currently printing strong above that level as well. So this is a much improved chart for oil. Dollar index still caught between the 2 important levels, which is the 2-year point of control, which supported the chart here, and the halfway point of the high in December here to this low, which is the resistance. We talked about that over the last few weeks, and you can see that it's proven resistance at this point. So price above that level, 96.50, printing time would put it in a strong position. Currently, we're kind of in no man's land here. We look at the Euro FX chart. We've got the 4-year at 111.65. That is exactly where the price is printing right now. So this week, an attempt to consolidate in last week above that level. Just weakened today on news on the financials front, the banks, Deutsche Bank. So the euro a little weaker, but still currently holding that level. Price below that would be weaker. That's 111.65, and we've got the halfway point off this low, just a little bit below that here, just below 111 precise level in the pre-open report. This is the pound dollar chart, the Brexit sell-off here. We've been watching the halfway point from here to here, which comes in at this level here. Just extended that to the right there, so just below that halfway point, just below the minor point of control across this range at 131.88. So you can see the pound remains in a weak position relative to the dollar here. Currently, unless that point of control moves, only price above 131.88 up here would put the chart in a strong price location from my point of view. Let's look at the sentiment indicators, my version of the right assets ratio unchanged at 7.24 on Thursday. The ratio reached 7.9 on the 26th of August. That was the highest ratio for the last 8 months. That was at this point here. Obviously the market was just breaking out to a new high for its current move at that point, a little bit of over enthusiasm, so we need to be wary of that level. Price is heading back, sorry, the ratio is heading back in that direction, and the ratio sort of up here above 8 would be maybe Once again, a little over-enthusiastic, all that dependent, of course, on price action in the market. We look at the bull fund assets in isolation. They reached a 7-month high about the same point in August. Currently not far off that level. And bear fund assets have been heading lower just over the last few days, down to this level here, which were previously reached back in December last year, just before the market sold off. So bear fund assets currently, I think, relatively worryingly low right now. Longer term sentiment indicators not completely convincing either way. The public poll from AAII, the bulls percent slightly lower at 24%. Bears percent was also lower at 37.1. 4-week moving average in black here, dipping below zero. Watching this level here, which was the previous low back in April. Kind of neutral, I think, in this indicator at the moment. Investors' intelligence poll. Bulls percent was slightly higher this week, bears percent lower. As we know, there were some interesting readings sort of 5 or 6 weeks ago when the bulls percentage reached 56.7. That was the highest since May last year. 4 weeks ago, the 4-week moving average of net, that's the bulls minus the bears. That's the black line, that reached 35.35 up here. That was the highest since May last year as well. So up here, the poll was indicating a little over-enthusiasm. We're off that level, but again, difficult to read anything significant in this indicator currently. The exposure index, which is the current equity exposure of active money managers, that ticked back up this week, 84.52. Again, we can't read much into that. This particular indicator much more useful when it's really low. Tends to give us great contrarian buy signals, that one. Final indicator is the Lipper US fund flows. They reported equity fund, including ETF inflows of 622 million in the week to the 28th of September. That's quite a small net figure for a single week. And we noted last week that 9 out of the previous 10 weeks had shown a net outflow. So the 4-week flow, for instance, here in black, remains below zero as it has done all year, not low enough to give us a clear contrarian signal yet. Okay, that concludes. Hopefully to get this posted before the open today. Once again, I wish you a good weekend and thank you for watching.